what's that say? Expressing your edge. Let's talk about this topic. Overtrading, trading too much, undertrading, trading like a professional blackjack player. Welcome and fan, much love, Trav here. I'm a professional trader. This is my job. It's a big part of my life. And got some free education for you here today. So there's two competing beliefs in the market, and we're going to look at both of them. And it's possible they both can work and coexist at the same time. But one, this is the common one, is like, well, you need to wait for your edge. You need to be patient. A great opportunity doesn't necessarily come around that often. If it's easy to trade too much, and it's generally better to trade less. Trade less, wait for the big opportunities, and maybe risk a little bit more on those. That's one of the beliefs. And what is your belief, right? Whatever your belief affects your trading system, affects the rules that you choose, affects your ability to follow the rules. So if you believe, you might believe both of these things. So if you have a hard time, if you're over trading, it could be you don't really believe this. It could also be that you're self-sabotaging, that you're trying to lose your money, so that for some reason, some subconscious reason. But that's one of the common beliefs. Do you believe that it's better to only trade, like rarely trade, and then put on a big position, or trade with conviction? So now the other belief is that you should trade whenever you have an edge. Always trade, and if you have an edge, like, you should trade often, and just manage small risk. Never risk more than 1%. Like professional blackjack players, when they're when they're counting the deck and the deck's in their favor, they don't have a huge edge. They might have a couple percent edge, and there was a professional blackjack player turned trader in here, and I'm trying to remember. I think they bet like 5 to 10 times an hour, and they risk small. And over a long time, they can make a lot of money. Now, if you do believe that in trading as well, that all you need is a small edge played out many times. And if you risk small, you don't blow up, over time you're going to make a lot of money. So you can see how these conflict, where one is like, yo, I have a small edge on this. I'm just going to play this. I'm going to take this trade because I have a very small edge. And I'm going to take every trade where I have a small edge, and I'm going to risk small. And I might lose a lot in a row sometime. I might win a lot in a row sometime, but eventually I'm going to make a lot of money. Or on the other hand, only trade when I have a huge edge and I'm very likely to win, right? So depending on what you believe in your system, now I'm going to tell you how I think both can exist at the same time. If you're a professional blackjack player and you're sitting at the table, you're going to try to express your edge a lot. Every once in a while, the deck's going to be hugely stacked in your favor. That's when they call in the big player, and the card counters, they bring in someone with a large capital and they bet big when the odds are really great, but maybe they just are betting normal as they're counting. But at the same time, even if they're betting 5-10 times an hour, in between, they have to do nothing, right, and say nothing. So you do have to be patient, but you're able to trade a lot at the same time, or bet often, right? So when you have there's different combinations that work. There's different combinations that don't work. One is like, oh, I have a small edge, so I'm going to take it with a large size. Like, obviously you could blow up that way. But also, if you're just waiting for the best possible trade, kind of hard to put up consistent results. So what do I believe, and what do I see from the market wizards? What I see from the market wizards, for the most part, they're more like the blackjack player. They're taking a lot of trades, typically, lots of trades. Um, some of them trading, yeah, some of them take a lot of trades. Now, some of them are spending a lot of time trading. Some of them are taking a lot of trades, but not spending very much time trading. So they might, and this is sort of what I do. Okay, so, and by the way, my belief is both, but they come in and I have a signal, and like these are the 3 positions we're going to put on today, and boom, the trading day is done. But for me, I'm typically during the trading week, I'm putting on 2 or 3 positions a day. I'm in the charts 15 minutes. I see 3 ideas that I like. I'm going to risk small on each of them, 1% on each of them, put them on, come back the next day, express my edge again. So we'll talk about my results in a minute, but yeah, I mean that's what I believe. It makes sense to me. I believe that. It makes sense to me. One is, if you have any amount of edge, there's money to be made. But if it's only a small edge, it's still worth putting on, but the risk needs to be really small, right? What do you flip? What do you flip a coin where it's 52% in your favor, 48% against you, and bet? How much would you bet on that? And you could do that all day. I would do that all day, but I wouldn't bet very much, right? You know, I'd bet 1% of my money, because I know, or in that case, maybe 2%, but not 5%, not 10%, right? So, I mean, the way I see trading is similar, or the way I like to trade, and again, it's your beliefs. Like, and it's really hard for me to not trade, like show up and do nothing, because I believe, like, I'm looking at this, I've seen this pattern, I believe I have an edge here. Why would I not trade? So what is your belief? When I tried, like, oh, I need to trade less, I'm over trading, let me do nothing, it was super hard for me, and it's really easy for me to trade a system that puts on trades all the time. So we'll talk about that in a moment, but like, I think this concept of overtrading is betting when you don't have an edge, right? That's overtrading is sort of the wrong, it's kind of a misleading phrase. Like, you're not trading too much, right? If you have an edge, you can put on 10 trades a day if you have an edge on all of them. It's overtrading when you have no edge, or you even have a disadvantage and you're gambling. A lot of people trade worse than random, right? So if you're trading worse than random, you have no edge. This is what overtrading is. But I'm saying that if you actually have an edge, you could trade all day. You know, you could have a bot that trades all day if it has an edge. So as far as my system, there's a number of edges, and I'm going to talk about a few of them, right? If price closes near the high of the day, it's more likely to be a green day the next day. If price closes at the low of the day, it's more likely to be a red day the next day. If price closes over an old monthly high, it's more likely to be a green day the next day. If price goes above an old monthly high and comes back under and closes under and leaves a wick, it's more likely to be a red day the next day. Vice versa for the short side, if it or the lows. If it closes under a new low, it's more likely to go lower tomorrow. If it goes under the low but closes above the low, it's more likely to go higher tomorrow. There's other things. If the funding rate is positive in Bitcoin, it's more likely there'll be a sharp move to the downside. If the funding rate is negative in Bitcoin, it's more likely there's going to be, especially if it's super negative, there's going to be a sharp move to the upside on a high time frame. Commitment of Traders report, if the commercials are net short, if the commercials have been getting more and more short gold, it's more likely the gold price is going to come down. If the commercials have been net long, it's more likely the gold price is going to go up. If there's been multiple green days in a row, it's more likely the next day is green. If there's been multiple red days in a row, the next day is more likely to be red. If it's a large green day, the next day is more likely to be green. If there's a large red day, the next day is more likely to be red. What other systematic edges do I have? I'm not really trading volume because I'm not trading stocks. Let's see, what else? If the Fed is cutting interest rates, it's more likely that risk assets will go up. If the Fed is is raising interest rates, it's more likely that risk assets will go down. Although over time, there's an edge to trading the long side on risk assets. Um, if price closes near the high at the high of the day, if price closes near an old monthly high and closes at the high of the day but hasn't hit that monthly high yet, it's likely to at least hit that monthly high. If price closes near the low of a day and hasn't hit an old monthly low yet, but is near it, it's likely to at least hit that old monthly low. If there's a high time frame trend line that has many touches over months to years and price breaks under it and starts to go down, it's likely to continue. Vice versa trend line the other way. So these are some examples. Okay, if there's a green day and then there's a bearish engulfing candle, the next day is more likely to be a red day. If it's a red day and there's a bullish engulfing candle, it's more likely to be green the next day. So you can see how trading the daily chart, I can have all kinds of edges, and sometimes all these edges are present, right? So like with the Nikkei trade, the JP225 trade, which went awesome, price was closing at the high of the day, a big green candle, breaking out a 6-month consolidation to a 34-year high, series of green days in a row, consistently closing at the high of the day, right? You can see there's many edges stacked up, and I did bet more in that trade. But when I'm looking at every asset, I'm looking at Bitcoin, I'm looking at ETH, I'm looking at gold, silver, platinum, I'm looking at a dozen Forex pairs, I'm looking at US 100, 30, 500, 2000, I'm looking at, and then I'm looking at global equity markets. There's probably going to be a couple closing at the high of the day. There might be a couple closing at the low of the day. I'm always going to have a small edge. There's always opportunity for me to trade. So I trade every day and I risk small like a blackjack player. So how has that worked for me? How has that worked? And my system is really simple, right? I don't think I'm giving up much. It's hard for people to do it though. So this exact system, I've only been trading for 2 months. I've back tested it, and it's sort of discretionary. It's not that systematic. I don't think it can really go away because there's so many small edges, and because it's just how price is. Like if price closes at the high of the day, it's likely to be green. I don't think that will ever change. I mean, there's times where it gets choppy, but I feel like there's just rules. There's fundamental rules to how price moves. And I'm looking at the few basic ones. But again, like every trade, a lot of the time on trades, I think I've got a 55% chance on this one and a 40. Am I going to take a 55% coin flip? Yes, I am, 100%. I'm not going to risk that much though. I'm going to risk 0.5%. I'm going to risk 1%. And I'm going to flip 3 coins a day. So since I've been doing this system, this style, with this philosophy, with all my beliefs aligned, of expressing my edge, in about 2 months, which is what, 20 trading days a month, 40, right? A little more, 40. I took like, well, not counting the break-evens, like 100 trades maybe. So like 2 to 3 trades a day for 2 months. Well, what's the result? Is my expectancy during this period, I've taken roughly equal longs and shorts. My expectancy on a long has been +1R, awesome. My expectancy on a short has been -0.5R, awesome. Not awesome. But that evens out to my expectancy on a trade is 0.5R. And by the way, if the market's going down, then the various markets are going down, my shorts will work. Perhaps my shorts will be a positive expectancy, my longs will be negative expectancy during that time period. But think about it. I'm flipping. I'm taking a trade. I'm taking 2 to 3 trades a day, and my expectancy is 0.5R per trade. Right? Over time, like it's really varies. Occasionally a huge winner here. Huge winner here is how I'm trading. Small losers, small losers, small winner, break even, huge trade, evens out to 0.5R. If my expectancy per trade is 0.5R, which I think is pretty good, but I can create 3 opportunities a day, yeah, I'm going to trade all of them and I'm going to feel great about it. So this just some ideas, answer some questions about is over trading, do you need to trade less? I see some guys like, yeah, try to only take on 2 to 3 positions a week when it's really high conviction. My answer to that is develop more systems, right? Develop more systems, trade more assets, develop more edges, right? And if you think any of my edges are wrong, let me know. If you think that under the conditions I said, actually something is not likely to happen, let me know. If you're someone who trades the daily chart, tell me what else you think is an edge on the daily chart. Would love to hear it. But yeah, I mean, if you gotta align your beliefs. Like, if you truly believe, you gotta express your edge. You're gonna have a really hard time sitting on your hands. But if you truly believe that you gotta wait for a big opportunity, it might be easy for you. For me personally, like I said, I am a fan of, what is my belief? Is I want to express my edge. So I'm going to trade, I'm going to trade, I'm going to trade. I'm not going to spend a lot of time trading though, because based on what I explained to you, it's pretty obvious looking at a chart. Do I have an opportunity here today? So most of my time is spent studying and doing work like this and getting all my beliefs aligned. And then even my computer time, I spend an hour. The first 5 to 15 minutes, it's obvious what the opportunity is, what I'm going to do, and then it's just a matter of putting on the positions. Yeah, let me know what you think in the comments. Much love.